Good morning, everyone, and welcome to the European crossover webinar. And we are just seeing some data come out. The IFO, German business IFO, coming in at 95.9. Reuters poll was for 97, so it's still coming in weaker than what was expected or what the poll was, and actually weaker than the prior, which was 96.3. We're still waiting for conditions, which just came out at 99.1, a little bit weaker or almost in line with Reuters poll, and then expectations, which still needs to go on and be released. But nonetheless, the IFO business climate is weaker, somewhat weaker than what the poll was, and definitely weaker than what it was, on the prior. Expectations is coming in at 92.9, and moment. Looking here at the euro kind of fading a bit here. You can see that here. Let's go move this out of the way. And euro still remains under pressure here. Here to start off. And we did go and see the yen come under pressure. I noticed some support. You can see it right here, just a level at 778. And we've seen a bounce back. I mentioned in the chat room about trying to get it short here, or again here at 912. We did make it up right up there to, I think it was, let's see what the actual high was, almost 914. So here at 998, as the S&Ps eased back a bit, they made it up to about 3267. We're about 7 handles off right now. So we're easing a bit back here on the yen. Also, cable somewhat defensive, and we'll go on and get to that. But as I mentioned here, the euro pressing down here again, we had talked about previously. We mentioned it several times last week, the head and shoulders that we're seeing here. So we'll see how that plays out now. 1020 is very important support, so we've already tagged that before. And seeing dollar yen kind of press a little bit lower here. So let's go on and move into the news. That's rather slight, surprisingly, but Won hits 3-week low and yen rises as China grapples with virus outbreak. The won fell in an offshore trade on Monday to its lowest level in 3 weeks as the death toll in China from the spread of a new coronavirus mounted, raising worries. Authorities are struggling to contain the outbreak and sparking a bout of risk aversion. Japanese currency, often sought as a safe haven in times of uncertainty, initially jumped versus the dollar to the highest since January the 8th, before easing some on the gains and investors gauge public health officials' response to the virus. China's cabinet announced it will extend the Lunar Year holidays to February the 2nd to strengthen the prevention and control of the coronavirus, state broadcasters reported on Monday. Health authorities around the world are racing to prevent a pandemic of the virus, which has infected more than 2,000 people in China and killed 80. There are concerns that tourism and consumer spending could take a hit if the virus spreads further, which would discourage investors from taking any excessive risk. There's a lot of uncertainty about how much further the virus will spread and is behind the moves in currency, said Yukio Ishizuki. I thought dollar yen would be supported at 109, but it broke through that, so the next target is 108.50. This risk-off move is likely to continue for a while. Why he would think it'd be supported at 109 is beyond me. I mean, honestly, I would have expected the dollar yen to open up at about 870 and then test the 850. So he thought it would be supported at 109. So he thought it was going to be supported like 20 pips lower. I mean, I don't even want to say something, but in the offshore market, the won was under persistent pressure and slumped to 6.9776. The yen rose to 873 per dollar, its strongest level since January 8th, before pairing gains to trade up to 909. Japan's currency also jumped up by more than 0.5%. versus the Aussie yen and New Zealand yen as worries about the virus drew traders towards safe haven currencies. The dollar index against the basket of six major currencies was little change at 97.88. Traders said the market moves could be exaggerated due to low liquidity because financial markets in China, Hong Kong, Singapore, and Australia are closed for holidays. The virus, which emerged late last year from illegally traded wildlife at an animal market in central Chinese city of Wuhan, has spread to other countries, including Singapore, South Korea, Canada, Japan, and the United States. China's National Health Commission confirmed 80 deaths from the coronavirus and 2,744 cases as of Sunday. Big business across China are temporarily shutting stores or advising staff to work from home. Companies are also offering longer holidays and canceling events and imposing a quarantine. Singapore's government said on Monday the virus will hurt its already wobbly economy and is considering tax breaks for the tourism sector and other firms. The outbreak has evoked memories of the severe acute respiratory syndrome, also known as SARS, in 2002 and 3. Another coronavirus, which broke out in China, killed nearly 800 people in a global pandemic. Sterling, the euro, and the dollar were subdued as traders awaited the release of economic data and two central bank meetings. The pound was little change at 136 on the dollar and 84.46 on the pence. Bank of England is closer to cutting interest rates this week than at any time in the last 3 years when it announces the policy decision on January 30th. Growth at the end of 2019 slowed to its weakest since 2012, prompting BOE Governor Mark Carney and two other policymakers to speak publicly about the possibility of a rate cut. However, monetary easing is far from certain because of other data showing a pickup in business and consumer sentiment. And we'll touch here on gold. As I said, the news is rather slight. That was all those offered as far as currencies. Gold climbs to a two-week high as the virus fear sparks safety buying. Gold prices rose to their highest in more than 2 weeks on Monday as equities slipped on the growing concerns that a China's virus outbreak could impact the nation's economy, prompting investors to dump riskier assets and look for safe havens. Asian stocks slipped as the coronavirus killed 81 people and more than 2,700 in China have been infected, with residents of the Hubei province where disease originated are banned from entering Hong Kong amid global efforts to halt the rapid spread. Investors are looking for the new risk coming into the markets and running for the exits in equity markets. That's cause for gold to move higher, said Stephen Ennis. The virus is going to hurt the China's economy to a certain degree, he added. The outbreak has curbed the Lunar Year celebrations in China, where hundreds of millions of people would normally be traveling around the country. The continuation of the gold rally will rely on developments for good or for ill for the Wuhan virus situation. From a resistance point of view, the next level is 1,600 an ounce. Meanwhile, the yen rose on worries that the authorities are struggling to contain the outbreak. With that, we'll go on and start with the analysis. Bear with me. I'll start here with the euro. So the euro finished the week at the lows with the head and shoulders formation in full force and downside target of 917 being eyed. Immediate support comes in at 992, followed by 940. And you can see the 992 on that pink line right there. Resistance comes in at 1058. Seems like a far ways away. Two consecutive closes above 1078 is required of bulls to thwart the downside momentum. A daily close above 1152 is necessary to nullify the head and shoulders. So you can see here that we'd have to get above 1152 right here, which would be above the right shoulder. We have to close above that in order to go on and nullify this head and shoulders. And as I mentioned before, we would need two consecutive closes above 1078, and that's coming in right here. You see, too close to thwart, like just put a pause on this downside momentum. But in order to nullify this, we'd have to get a daily close above this right shoulder. That would nullify the head and shoulders right now. For now, we're looking at 992. You can see that comes in right there. And below that, we would have 940. And resistance, you can see that right there is 1058. And you see right there, that's where we're coming up with that right there. We'll move on to cable. Cable for the second consecutive week experienced an intraday reversal on Friday, failing once again to sustain a close above the weekly level of 3080. The past week was far more disappointing for the bulls as the pair had reached 3166, you can see the level right there, before succumbing to a deluge of selling. The key level of focus will be the pivot, 2980, with bears eyeing a run to 2898. You can see that right there. Before tapping the brakes. Resistance is going to be 3108. We're starting off in a relatively quiet morning, but once again, we failed at that 3080 area, which is just below that right now. But, we had made a challenge the prior week and looked like we might be able to get above it. And on the prior Friday, we reversed and sold off. Then this last Friday, a couple of days ago, we were well above the 30 and it looked like, oh, they're going to do it. We got to 3166. You remember we got there on the economic data right when it was being released on Friday. Immediately they sold into it. And remember, we were trading at about 31.32. We came off 30 pips like nothing. And then from there, we just kept on going lower and lower and lower to the point that we actually got below the 3080 and closed there. And it's just, once again, disappointing for bulls. I can't imagine they're going to turn around and come up. And honestly, even if it did, people, there wouldn't be much, I would not think very much participation, because then it'd be like, you're not going to fool me again this time. I know you're going to tease me and you're going to get up to 3080 and you're going to be right there just like the prior week. And then, 2 weeks before, and then even just last Friday, you're going to be right there tagging and you're going to pull the rug out from underneath me. I'm just saying that, to me, that's what I think that prospective bulls would be thinking, like, no, I'm not buying it. Fool me once, shame on you. Fool me twice, shame on me. Well, they actually fooled them already the twice. So it's like, ain't going to happen. You see what I'm saying? But at least I'm saying for any bull perspective that they'd be thinking, no, I'm not biting on it. I'm not biting. Now, drop down here to 2980, and maybe I'll take a look is what I'm thinking. I'm saying, and bears, hey, they've got the momentum going with them. They're like, hey, look, we already sustained 2 challenges of 3080. Heck yeah, we've got the momentum going our way. So they're going to try, and this is going to be the key right here, is the pivot. We know the 2980 pivot right here. And then if they get some momentum behind them, this is where they'll be going for, is 2898. So at least that's the way I look at it, is how you have to think of it like Blake, let's say, put yourself in the shoes of those people that were bullish, or put yourself with those that are bearish and feel like they've got all the momentum going their way. So resistance is going to be 3108. Well, we know the key level that they're going to be shooting for is the pivot. But let's go and take a look at what we have ahead of the pivot. It's probably right there. 3010, 3010. Now let's go move into the Aussie. The Aussie closed the week below key support of 68.48, despite a surprisingly bullish jobs report. The greater focus remains the upcoming RBA decision, where rate cut chances were downgraded in light of the jobs report. Weak consumer sentiment, coupled with the negative impact from the Australian bushfires, remains a drag on the economy. Support will come in at 67.86. We're just below that, followed by 67.48. Resistance is 68.71 with two consecutive closes above needed to negate the short-term downside momentum. Well, what's the bigger move here is quite often, the Aussie dollar is traded at almost like a proxy for China. And with the way things are developing, could get worse, certainly that is pushing even lower. And you can see we've already had three consecutive closes below the pink line. That's the 68.48. We talked about that. You can see how important that level has been on multiple occasions on the upside. On the dip back, you can see right here, 68.48. We dip back. We get above it. We come back. What do we test? 68.48. We rally back. We come back down. What do we test? 68.48. We bounce again. We come back down. We're below 68.48. We hang around there for three consecutive days. We're below it, and then here comes the momentum. So we are just below what we had as support here. We're actually going to move this lower here and move it right there. So that's going to be our support level now. 67, 69. We're actually almost there. So we'll say 67, 69, at least for today. And on the upside, it's going to be 68.48. And it's definitely bearish now. With that, we'll move into the Kiwi. And the spoons are continuing to dip here. Kiwi remains in a tight range over the last 2 weeks. Overbought momentum indicators have eased with the pause. Support level on a dip remains 65.44. Level confluence was 65.44, the 38%. Upside potential is 66.91 with a close above, opening the challenge to 68 even. Confluence 68.06. So right now we're looking at 65.44 right here, and they'll mark that for our support. And on the upside, we'll just go right across here, right to that dead center. Let's call it 66, just a little bit higher than that, right there. 66.13. And let's go and move on to the dollar CAD. The dollar CAD, after a pause post-BOC roundup, closed the week above 31.36. The initial challenge will be a daily close above the resistance, which is 31.78. You can see that we're slightly above that. Two consecutive closes above will open the door for a move to 33 even. Support is 31.05, followed by 30.89. So we're just above this 30.78 right now. Actually pushing a little bit higher here. We're actually going to go and target our resistance right there then. 31.96, 31.96, because we are above that 31.78, so it's going to be 31.96. We may switch to bullish, but it's going to have to prove itself. We need to get above here. Then we can move it to bullish because it's been, you can see here, we even dipped below here. We held here. Overall, the bigger term was bearish, but we'll see if today, if we can hold up in here, then we'll be flipping it to bullish. The same way, correspondingly, we flip the Aussie to bearish. Support right now is going to be right there. It's going to be 31.28. 31.28. And with that, let's go into the dollar peso. The dollar peso has been quite restrained among the ensued volatility brought on in the equities reaction to the virus scare. The pair is a potential to 1905, followed by 1914. The pair finds solid support at 1965. Confluence with the 1865, I meant to say, I don't know why I said that. 1865, confluence with 1862, the 161% of the recent failed rally. A break lower would have bears immediately target 1844. Well, you can see with the way equities are rallying or failing back, that's probably not likely they're going to push in. That 1865 has been really holding really well. Remember, we were trading in such a tight range. They finally tagged it down here. We held her on. They tried to rally up on Thursday and Friday, and wasn't much, and now we're starting to push higher. The door is open for a move to 1905. We're gonna suggest, I'm saying, thinking that they can push up here today, probably on some just plain old short covering. The initial resistance right now is going to be 1898. So what we're going to do is we're going to go with 1898. There you go, 1898. Let's get rid of this. There. Still bearish. And on the downside, we'll be looking for support right there. Call it 18, right there, 1881. With that, let's go move into the dollar yen. The dollar yen finished the week above 110 with resistance. I'm doggone it. That's up. Let's see. I don't know why that didn't save. Let me go and pull the analysis up. There we go. I don't know why that didn't save. Doggone it. Well, anyway, not sure what that didn't save, but it didn't save. Well, here's the deal on here. We had actually finished the week just below the pivot of 927. And the only thing I will say about the dollar yen, I'm surprised that we were able to, that we didn't open up even weaker. We actually opened up around 109, and then we found support, and I mentioned this in the chat room. Let's go move in here. Support back at this level, which was 878. You can see here, and we took a dip, and then we rallied up here. So I'm surprised we didn't actually open in light of all the news that we didn't open up here at 1870 and press lower for 850, which we've got some pretty good support just below 850 here. We did go and make a track up here. I mentioned in the chat room, good area to go and get short would be around, and I put on there 912-ish, and the high was 914. We're starting to dip back a little bit here. Has a lot more to do right now with the SPOOs pairing back. We did rally the SPOOs up to 32, almost 32, just a bit above 32.66, and now here we are. 10 handles lower, actually now at 32.57. So it kind of paired back a bit. The thing that I was questioning is that even when we were really getting some bad news, or appeared to be on Thursday and Friday, the yen you would have expected to come off dollar yen to come off much more. So on the upside, we're going to go with on the upside, we're going to go with 918. If we get a pullback up here. And support's going to be, we didn't get to the 878, but we're going to look for support at 847. You see this coming across right there? 847. And that's going to be bearish now. Let's go and move into the cash dollar index. So the dollar index closed right at the weekly pivot of 97.89. You can see that there. The pair is in a bullish mode with initial resistance at 98.11, followed by 98.42. Support is 97.42, followed by 97.15. Well, it almost seems like it reminds me of an old movie way back when called The Reluctant Astronaut. And this is what this feels like. I mean, it's higher, but it almost doesn't feel like it wants to go up there and grab it. But it's going to be key for us to close above 97.89 for the week. But we'll generate some extra buying, at least if we can close it above it on a daily. So resistance, we're going to give it, in case it is able to squeak up there, it's going to be 98.11. And on the downside, 97.42. With that, we'll move into the cross rates. The Kiwi yen finished the week at the lows just above the 72-cent level. Potential move to start the week is 71.47. Wham, bam, thank you, ma'am. That's exactly where we're at, 71.47. Resistance is 72.45. Two consecutive closes below 71.04 nullifies the overall bull case. So if we get two closes below here, that's the end of the bull case. Two closes below. We're right here at support. So we're going to stick to our guns on that one. And we'll say 71.47. And on the upside, it's going to be right there, 71.80 for resistance. You can see that coming right across. Let's move on to the euro yen. The euro yen closed at the week's lows, breaking support level 20.75. Immediate support comes in at 20.10, followed by 19.70. The downside force is strong as the euro overall is weak, coupled with the potential yen strength on the backdrop of the coronavirus scare. Resistance is going to be the broken support at 20.75. So we're looking for potentially a move down here to initial support came in at 2010. We're even below that right now, followed by 1970. And looks like that's what we're going to be heading to. So we're looking for 1970 on the downside for today for support. And on the upside, you can see that coming right across here. See right there? Right there? coming across. That's going to be 2030. 2030. And I prefer that. You can see right up here, but that might even be a stretch here. See what, we'll split the difference and call it 2035. And we're going to flip this to bearish. And with that, we'll move on to the euro AUD. Well, the euro remains in a tight range over the battle of which currency is weaker. I, meaning the euro, I am. No, the Aussie, no, I am. The support level is 60.40 with the daily close below needed to further a downside break. Resistance is 62.47 with a corresponding reaction regarding a close above, meaning on either side, you'll be able to generate further movement. But these two currencies have been playing tag as who's weaker. No, I am. No, I am. And so this is what we're looking at for resistance right now. We're above that currently right now. But as far as it, and it's going to be important if we can close above 62.47, that'll open the door for further movement. At least for right now, though, on a very, very short-term basis, intraday, we'll just look at the resistance being at 62.73. But important is going to be the closes if it can go above 62.47. So 62.73 on the upside. And on the downside, it's going to be right there. You can see that coming across here. And really, I don't even think it would even come close to there. But if you were bullish, that would be a risk target right there. It should be right there, 61.42. That's a long ways off. And we could probably even realistically want to push that just a little bit higher. You see right there? Shouldn't even come anywhere close there. So we're going to say 61.64. And let's go with the Euro Kiwi. Well, the Euro Kiwi has broken lower with established momentum, allowing for a move to 65.29, which is 127% of the recent move, which confluence was 65.68, which is 161%. Well, you can see we're moving higher at this point. A bit surprising here with the euro. Well, the euro is popping up just a little bit, but so we're seeing further weakness, like obviously with the Kiwi. Resistance and the risk level for bears is going to be 67.58, which actually we're above that. So for right now, the resistance, and we can see here, we got to 68.04. But if they can push it a little bit further, it's actually going to come in right there. Now you can make the case right here. We're key resistance, but initial resistance, I have to say, would come in right there. Let's call it 68.23. A bit of a surprise here. And on the support, it's going to be right there coming across here. You see that right there? Right there. 67.03. Actually, it's a long ways away from that, too. We want to go, there it is, 67.07. Really, that would be the risk for bulls, 67.06. With that, we'll move into the Aussie yen. Well, the LCN broke the trend line support, exposing a move to 73.56 with initial support at 74.02. Immediate resistance is 74.84 with the daily close above 75.25 necessary to temporarily keep the bears at bay. Yen strength in light of the coronavirus is going to determine the velocity of the move. So right off the bat, we're already looking for support at that move that we thought it was open to move to that. Well, heck, we're even below the 74.2. So support is going to be, once again, you can see right there, is going to be 73.56. That's what we're looking for. I'll move down here to 73.56. Obviously now bearish. And on the upside, you see this coming across. It's going to be right there where all that volume is. 74.24. About a good 50 pips away if we saw things turn around. And with the guppy finished the week at the lows of a tight range. Support will be 41.98, followed by 41.45. Resistance is going to be 43.40, followed by 43.81. So resistance-wise, we did take a dip here, and we did say we were looking for support, 41.98. Well, we got as low as looks like about 42 almost. So 41.98 on the downside. On the upside, right there, 42.97. Coming right across here, 42.97. Still bullish. Boy, have we seen a pretty good rise. Look at this. Boy, we're running away right now here with starting on. The starting on finished the week higher, but appears to have lost some momentum. Obviously, that's not the case right now with Aussie really taking a beating. The risk is for a pullback to a major weekly level of 90.58 before the market assesses its next run. Upside resistance is going to be 92.45. We're well above that. A daily close above would put the bulls squarely in the momentum's driver's seat. Well, you can see right now we have really gone right past that. And really, the key level at this point is going to be this close right there, 93.66. And we're certainly on our way. Support, well, it's going to be right there. Actually, here, if we would see, I don't think we'll see a turnaround, 91, 92. It's going to be right there on the pink line, 92.47, which is literally 100 pips away almost. And there we have it, the bias chart for today. As I mentioned, we'll be looking right there for the resistance here on the sturdy nod. We are seeing the dollar yen now backing down all the way now to 8.85. As the moves continue to weaken, they're breaking even lower now. Now at 32.52. Definitely breaking lower here. We'll just go and take a quick look over there, and I'll show you. So you can see here the SPOOs. Look at that. And this has been in quick order. Look at this. We make this run up here to 32.66, almost a half. And look at the size of this. So pretty good volume that got traded there. And then look, we just turn around and start falling apart. I mean, just literally collapsing here. Look at that. Obviously, that sent the yen. This is the 6J up here at these highs. Lows for the dollar yen spot. Notes aren't at their highs right now, which is interesting. But we do, as I mentioned, have the SPOOs at their basically right at their lows, challenging right now. We may try and hold this area here. We'll see what happens. But obviously, equities are going to be driving the bus this week, especially with equity earnings, with earnings week. So, and of course, the general volatility. We'll see if we can hold here in this area. That may allow the dollar yen to come off, or the yen 6J to come off a little bit, which might allow the dollar yen on the spot to stabilize a bit here. But that's what we have today. We'll see you in the chat room. Thanks for joining us here on the European Crossover webinar.